Coming up on Leading the Charge.
Huge news in the industry, and one that I don't think a lot of people saw coming. I've spoken to a number of people over the past week, and people are really didn't see this coming. This is interesting. And I don't know if that's because they didn't expect United Rentals to let it go, or they just didn't expect Herc to do an acquisition like this.
This is Leading the Charge, where we talk innovation and insights in the industry of sustainable energy. Leading the Charge is brought to you by Power2, a global provider of energy storage solutions. Let's simplify sustainability. And now, from the Power2 studio and broadcasting everywhere from leadingthecharge.io, here are your hosts, Tim Doling and Kevin Sturmer. Welcome to Leading the Charge, where we talk battery energy storage insights, innovation, and the industry of sustainable energy. My name is Kevin, and I work in the marketing department of a company called Power2. And with us, as always, is the incredible co-founder of Power2, Tim Doling. He is also the vice president of global markets. How are you doing, Tim?
Doing well today, Kevin. Thanks for having me. How are you?
Doing well. And for those who caught the first episode of season 2 here on Leading the Charge, we were talking about United Rentals and their acquisition of H&E Rentals, which at the time was one of the largest mergers in rental history. That was January 2025. Cut ahead to a few weeks later, Herc Holdings, Inc. has announced that H&E has terminated that agreement with United Rentals, and Herc has now entered a definitive merger agreement with H&E, whereby Herc will now acquire H&E Rentals. This is a $5.2 billion deal, 75% in cash, 25% in Herc stock. Joining us to break this all down once again is Jeff Eisenberg from Claremont Consulting. Thank you for being here. How are you doing, Jeff?
Thanks for having me. Exciting times.
Absolutely. It's exciting. Tim, I want to start with you. Let's get a little bit of background on Herc and why this move was maybe surprising to some people.
Yeah, thanks, Kevin. So certainly huge news in the industry, and one that I don't think a lot of people saw coming. I've spoken to a number of people over the past week, and people are really didn't see this coming. This is interesting. And I don't know if that's because they didn't expect United Rentals to let it go, or they just didn't expect Herc to do an acquisition like this. So for the sake of background, Herc, or Hertz Equipment Rental Corporation, spun off from Hertz Car Rental back in 2016. So difficult to believe that's almost 10 years ago they spun off from car rental, and then they actually floated as a public company themselves about 6 to 8 months later, headed up by Larry Silber. And interestingly, their strategy has not really been through acquisition to grow, but rather to just grow organically. And so you can look back at public statements that Larry made both in shareholder conferences and also on an interview he did with Engineering News Record in 2016, where he was actually asked point blank, is growth going to be done organically, or are you looking to make acquisitions? And he said at that point, it's going to be done organically. As far as acquisitions, we believe we already have an amazing footprint of 270 locations in North America, over 280 around the world. All of these are purpose-built locations that Hertz has built over the last 50 years. The company had a few minor acquisitions over the years, but it wasn't built on an acquisition strategy. So they were looking to build on what had worked for them previously, which was that organic growth in the various markets that they did well in. So I think that's pretty much why people were so surprised that this huge acquisition came. In fact, I think it's the biggest rental acquisition in history. Is that correct, Jeff?
I think it's the biggest rental acquisition in history. I think even when United was offering to buy Head and Enquist not that many weeks ago, that was already going to be the biggest acquisition in the history of the rental industry. In fact, this acquisition is bigger than the rental industry in most countries in the world.
That's just crazy. So let's go over the numbers again. The acquisition amount was $5.2 billion, was it?
That's a $5.2 billion. 75% is that is going to be in cash, and 25% is going to be in Herc stock, which has performed really well over the last year and the last few years as it's come out of the recession. But both United and Herc's share price has gone up, and it's performed very well. So we'll talk about this later as well. This is also a bet on the U.S. economy.
Yeah, I was going to ask about that. So I had two quick follow-up questions. The first on how are Herc actually going to fund this? 75% cash, that's a fair chunk of cash to come out of any budget. So where does that come from? And secondly, this shows a huge amount of confidence in the economy going forward, especially here in the States, which is where H&E is. Well, I think they're only located in the States. I don't think they're in Canada. So it shows some confidence in the market, and also a pretty good multiple of EBITDA for that company.
Yeah, we should talk about the multiple as well, because that's an important detail, because the price is higher. The price that Herc is offering is $500 million more than the United Rentals price, which was already well, the multiples were reasonably high, but not frighteningly high, as sometimes United, for example, has paid for specialty rental businesses. So where the EBITDA multiples are sometimes 5, 6, 7 starts to for a general rental company starts to feel pretty high, but for a specialty rental or a temporary accommodation rental, the multiples can get up to 8, 9, 10, even higher sometimes. It depends on what the profitability possibilities are of the acquired company, and what everybody's optimism is about the markets that these companies work in.
Yeah, that's interesting. But H&E is not typically a specialty business, is it? It's more general rental and aerial. So it's interesting that the multiple they've commanded is that much, and also Herc are paying a 14% premium on what United Rentals had previously offered. So it goes back to the confidence in the market. But again, where does the company fund this from?
Well, Herc has a facilities already in place. They have enough bank lines to do this. I don't know if they've said explicitly or implicitly that instead of they may buy a little bit less equipment over the next few years, and just digest Head and Enquist, because Head and Enquist has got quite a lot of equipment. It's got almost $3 billion of equipment at original cost, which is, I think that's more than Herc would spend in a typical year anyway. So, but some of the value that both United and Herc are saying that the reason that the imperatives behind doing this are it's the synergies. What can you save in the saved overheads of the combined company? You only need one finance department. You've got some overlap of depots, and they can work better together, or you can consolidate. That's one of the synergies. The other one is the revenue synergies. If Head and Enquist is a generalist and it's got 4 major categories, but Herc has got a huge amount of different things that it rents. There's a lot of specialty business. It's in the pumping business. It's in the film and television business in a big way. They do lots of different things. So they've got a bigger catalog to sell to the Head and Enquist customer base. United Rentals said they were going to save $130 million in costs and $120 million in they were going to get $120 million of extra revenue synergy. The total Herc proposal is to take that up to $300 million in synergies. So Herc says they can squeeze another $50 million a year out of the extra synergies in this. So it's a big push. Now, United's been acquiring companies for years. That's how it was formed. That's what it's done since the first day of its existence. And United has acquired over 200 companies over the last 20-something years. So United's really good at digesting and integrating companies, great systems and everything else. While, as we know, Herc has grown more organically over the last 50 years. It's a lot older company. When there were no big rental companies, there was Herc.
Yeah, and this is just going to further cement their position, especially in the US market. How often do these sort of things happen? Like, I've never heard of a acquisition being agreed and then somebody else swooping in and taking it over. Does it often happen?
A couple of things come to mind. There was a bidding war for the Lavenden Group in Europe, but that must have been something like 10 years ago, and it finally went to Loxam. So it doesn't happen so often. So this is it's a surprise. I would have bet against it happening, because it's also there's not that many rental companies that are big enough to handle this in the world. So it's a pretty big. You think of a large snake eating a very big mammal. It's going to take a while to digest this. This is remember if Herc's total fleet, or the combined company's total fleet, is something like $10 billion, the goodwill item, which is the amount of excess paid over the metal in the acquisition, it's going to be something like $1.5 billion. So this is actually a big piece of Herc's total asset base. Now, if they're right and the economy continues to go reasonably well and they do their and they get their synergies and everybody, and then it will make sense. And I don't think this is the last big acquisition we're going to see.
No, I fully agree. So what? Just to finish on that point, then, so Matt Flannery has made the statement that they're not going to pursue it, so they're not going to counter offer or go after it. So it looks like it's going to be a done deal. So what do United Rentals do next?
United Rentals continues to acquire companies. They acquire. That's what they do. That's the people that set up United Rentals, Brad Jacobs and team, back in the late 1990s. That's what they did, and that's how they started. So they're going to continue to acquire, integrate. And United has started to do things outside the United States too. They do rental in Australia. They do some amount of dozens of depots around Europe. We'll sooner or later they'll be a global company as well, and that'll part of that may depend on what the opportunities are in the United States, because the United States has had such a run over the last 10 years. The growth rate's been incredible. One of the things about the United States rental market over the last 10 years is that the rental prices have had some inflation to keep going along with the costs. While in Europe, a lot of these markets have had relatively steady rental rates kept flat or even going down because of intense competition, but the costs have continued to go up. Energy, equipment, personnel. But the United States has continued to thrive, and margins have been remained excellent, in some cases even gotten better.
Yeah, I just got back from the UK, where you obviously are, and they just can't believe the rental rates that are still being commanded in the US compared to what they're getting in the UK. It's just pretty insane. So it's obviously an attractive market for a lot of people.
Now, Herc reports on that. If you take a look through their investor presentations, they do say that they do quantify how much their rental pricing has gone up, and it's usually somewhere between 5, 6, 7, or 8%, something like that. And but compounded over 5 years is excellent. And the Europeans, UK rental companies, the French and the Germans would love to see that kind of improvement every year, because everybody's costs are going up.
Yeah, I was just looking at some of the slides from their investor presentation, and their growth and earnings, they're doing extremely well. So
yeah, although the utilization for Herc and for Head and Enquist has been kind of steady. I think for Head and Enquist over the last 12 months, I think the utilization went down a little bit, but the rental rates came up a bit. So it's a good steady business, producing a lot of cash. So a lot of these rental companies, a lot of the big four in the United States, produce excellent amount of cash. So their debt's been coming down steadily, even as they build fleet. Companies like United Rentals has been repurchasing its own shares, so they've been giving money back to investors that way. And the amount of extra cash that these rental companies have been producing is it's billions of dollars. It's a lucrative industry. While the Europeans continue to invest in equipment, but they're not paying the amounts of dividends, and they're not paying down the debt at the rate that the U.S. companies are.
So I want to go back to the original deal. We're a few weeks out from when that was announced. By now, a lot of wheels were probably in motion. So the question, Jeff, I'm curious, what does it take to put the brakes on that deal and shift into a new direction? What are the costs involved? Well, basically, what was already happening?
Oh, the fees that you run up with between for due diligence, financial analysis, bankers, analysts, stockbrokers, lawyers, everybody doing the real estate, it's tens of millions of dollars. So it's you've had a lot of people working day and night to do all kinds of analysis for this, just because it's so large. But remember, for a $4 or $5 billion acquisition, 1% of that is already 40, 50 million. So the numbers are very big very quickly. Now, remember, I don't think there's a single human being that has visited every United Rentals depot, because there's over 1,500 of them. I'm pretty sure that no single person has visited every Herc depot either, but it's more possible that it happens. But it's probably the case that there may be somebody that's visited every Head and Enquist depot, because not quite so many of them. So these businesses are absolutely enormous in scale. So the companies that have done a phenomenal job to keep systems and controls in place to make these businesses continue to be efficient at that size. But but the size helps a lot too. The if you become somebody's biggest customer or one of their biggest customers in the world, great you've got great negotiating power with suppliers. You've got a lot of footprint. You can move incredible amounts of equipment east, west, north, south within the United States, and in and out of Canada as to follow the work.
So, as we do with every episode, we end by answering a question or two from the audience. And if you have a question for us, send an email to leadingthecharge@power2.com. This was somewhat of an unexpected episode, so we're going to ask a question, but let's try to zoom out a bit and sum up what is happening here. So, what is the impact of this merger on the rental industry in terms of the U.S. and then also on a global scale?
Some equipment doesn't travel across borders. There's CE mark specific equipment for Europe, while ANSI spec for the U.S. Tier 4 diesel engines, Tier 4 final diesel engines versus Stage 5 in Europe. That said, if you have a big lithium battery from Power 2, that could be more of a global product. So as things evolve, maybe some of these products will move around the world a little bit more easily. So because the equipment doesn't move quite so easily, it may be these rental companies will have to do something slightly different in some of these other countries, and they can't necessarily supply the whole globe with exactly the same equipment. But the globalization of that industry it's on its way to happening. In general rental, there's not very much of it. Even Sunbelt does business, a significant amount of business. They're the biggest rental company in the UK, and then number 2 in the US. But I don't think very much equipment moves back and forth between them. And the businesses are quite different, and the profitability levels are quite different. So I think it'll take either a downturn in the U.S. to make some of these other markets look more interesting, or increased profitability in Europe to be more desirable for companies like United, who have an incredible business with excellent returns and good cash flow in the U.S.
Yeah, you mentioned earlier about United Rentals doing some small acquisitions in Europe. Is there anyone in Europe that, if they were looking just purely at scale, is there somebody in Europe you think they would go after just to get the footprint?
There used to be two excellent rental companies, still are excellent rental companies in Scandinavia, and both of them were traded on the Finnish stock market, Cramo and Ramirent. Both of them have been acquired by European private rental companies, one by Loxam and one by Bowles. So you would have to negotiate with a privately owned company to do that, rather than make an approach for a stock market traded company. Most European countries do not have any rental companies traded on the stock market. The United Kingdom has a few, but some of them are performing well and some of them are under pressure, partly due to this intense competition.
Interesting. So you got Loxam, which is probably the largest in Europe, isn't it?
It is.
At about 2.3 billion of revenue, and then Bowles at about 1.5 billion, somewhere around there. So even though they're huge companies in Europe, still nowhere near the size of United Rentals.
Nowhere near the size of United Rentals, and I think that generally the profitability is a bit lower. Certainly, the EBITDA as a proportion of revenue is lower. Kilo 2 in France performs well. I think it's a bit more profitable than some of the other big ones. And now that's family office, private equity owned too. So we'll have to see what happens. I wouldn't be too surprised if 5 years from now, either Sunbelt or Herc or United Rentals bought one of the 3 big Europeans. Possibly all 3 of them will change hands. But while the United States is continuing to motor forward, it remains a very low-risk proposition, even to pay a relatively high multiple for another rental company in the U.S. rather than going to Europe, where you can't necessarily fall back and take your equipment from the U.S. to Europe or the U.K. It remains an optimistic moment and it's a big bet first by United and then by Herc and its investors that the U.S. economy will continue to do well and that the rental industry will do well too.
Exactly. Yep. Something to keep our eyes on. And something to keep your eyes on is whatever platform you're on. Hit the like button, hit the subscribe button, do all of those wonderful good things. Leave a review. That helps us out a lot. You can find more information in the show notes, some links. You can also find a link to connect with Jeff, and you can also visit leadingthecharge.io. Our legal team wants me to say that any statements or views expressed by the hosts or guests on Leading the Charge are entirely their own and do not necessarily reflect the opinions or positions of Power 2, their partners, or affiliates. And finally, a big thank you to Jeff and to Tim. Wonderful insights today.
Thanks very much for having me.
Thank you.
And thank you to you. We know your time is valuable. It's one of the greatest gifts we have in the world. And we appreciate you spending a little bit of your time with us today. So let's simplify sustainability and keep leading the charge toward a world powered by sustainable energy. See you next time.